escrow, please.
Like, why do we do this? Why do I gotta hand the bank all of my money for property taxes, for home insurance? Like, can't I do that on my own? Well, let's talk about it. If you have no idea what I'm talking about, when you own a home, sometimes you have to have a escrow account with the bank, and that's where they collect money from you for property taxes and home insurance, and they are just the one that holds it until they pay that out. Now, sometimes you can get out of that, and we're going to talk about that in a second. So to get that money out of escrow, you typically have to at least have a loan to value of 80% or less. All that means is you put down 20% or more, or have paid off 20% or more of the loan. You also need to make sure you have clean payment history. You can't be missing payments to get money out of escrow. And then you might have to pay a slight fee, but this is rare. I didn't have to do that when we did this for our mortgage. And now I want to show you the impact that this can have to get more dollars in your pocket, because that's what Everyday Finance is about. So by me saving for property taxes and insurance instead of the bank, I can earn interest on that. Here's our most recent numbers for property taxes in the summer, winter, and then our yearly home insurance. And below that, I have our 4% interest we're earning in a money market or a high yield savings account. And so total between all three of these, $453 of interest is what I would be getting in our bank account. Now, that might not be a lot of money to you, but to some people, that's going to make a big difference. Now, let's say we invest that at 10% interest for 20 years. Now we're taking $3,000 into account that you could have in your pocket instead of that stupid bank. And that's what I want you to know. There's little wins that stack up, and those little things turn into big things in the long run. And so for you, getting your money out of escrow with the bank for property taxes and home insurance, if you can, if you're responsible enough to pay those on your own, well, it can pay dividends in the future, and that's what Everyday Finance is about. Hopefully that makes sense overall. I love doing these videos. Chris Lee, Everyday Finance. I will see you in the next one.